Welcome to Small Cap Nation. I'm Jane King. I'm here with Jonathan Shechter of Foley Shechter Law Firm. And let's start with just telling me what the law firm does. Give me an explanation.
Sure, happy to. Thanks for having me. We are a boutique firm. We're based here in New York, and we represent companies ranging everywhere from very early stage startup companies and all the way through publicly listed companies. We also represent high net worth investors, funds, and broker dealers. And primarily our areas of practice are corporate, securities, and commercial law, mergers and acquisitions, and various forms of going public opportunities. So for example, alternative public offerings, self-registrations, and the like. We also represent startup companies, so that would be with everything from their very early stage startup needs through venture capital. And lastly, we support our clients with soft IP work. So for example, trademarks and copyrights, other registered protected works, and licensing matters.
And when you say very early, how early is very early?
We've met with entrepreneurs that have not even a business plan, but a concept. And although that's not our core expertise, we still try to support those clients and at least help them get a vision for where they need to go, give them a few directive steps, and hopefully we can meet up with them a little bit later in the process.
An alternative to IPOs. I've been around the stock market all my life almost, so I'm used to IPOs and shares traded. What are alternative ways?
Well, a company doesn't necessarily need to do an initial public offering. Companies can still become registered with the SEC through various other means. For example, they can do a reverse merger with a shell company. They can do a self-registration, and by that way, a private company actually undertakes its obligations to file with the Securities and Exchange Commission, and in that way, they'll lend a little bit more transparency to the market. That sometimes gets a better reaction from investors, and a company may see benefits to doing a public offering that way.
Okay. Now, how does Foley Shechter different than other law firms in this space?
Well, I think we differ in a few ways. First of all, we try to aim to be a one-stop shop for our corporate clients. So we try to help them with everything from the very basic corporate needs and then all the way through becoming listed. And thereafter, once they're listed, we represent them vis-a-vis the Securities and Exchange Commission or FINRA or some other regulatory body. In addition, we try to be engaged. So we're not the type of firm to sit passively behind a desk and wait for an issue to come up. We try to think 4 or 5 steps ahead. We try to be active, and in that way, we try to kind of help our clients sidestep issues and really become engaged with them. And kind of lending to that, we're very active in the tech, finance, and startup community, not only in New York, but also nationally, and in Israel, which is a country we have a very close connection to. So for us, legal practice isn't done in the vacuum of an office. You know, we are very, very much out there. We have our finger on the pulse of these communities. So we're able to know the key players, we know the finance players, and in that way, we try to help our clients one step further.
And this year has been crazy
This year
for
has
the
been
market.
crazy,
I mean,
absolutely crazy.
Extremely volatile, huge moves, up and down, mostly down, it seems like. How do you advise someone on the timing, if they're thinking about going public? Tell me about that process.
Well, you know, that's the $1 million question, right? No pun intended. But you know, before going public, we need to talk about a company being ready to raise capital. And ready, I think, means being ready to execute on a process. And obviously the hard question is, well, what does it mean to be ready? So for us, we try to look at 3 key components when a company is looking to raise capital. And if we can kind of check the box on these 3, we're in a better position than most companies. First of all, I think that a company should have a sufficient cash runway so that its back isn't up against the wall during the capital raise process. Cash runway equals negotiation leverage, without a doubt. So we don't want a client to kind of empty its gas tank halfway through the process, obviously not a favorable position to be in. Second, I would say that we would look for the company to have reached certain milestones or a certain valuation. You know, differing reasonable minds will come to different conclusions on what the right milestone or what the right valuation is, and obviously companies are always looking to reach a next step or a better valuation. But as long as everybody can come to a reasonable consensus that the circumstances are pretty good, I think that meets that test. And then lastly, and this may sound kind of basic, but you want a company to have a very strong pitch, and you want a company to be able to meet with an investor's diligence review. You know, we've come across a number of times where a company is in the middle of a capital raise process and it's not able to, let's say, meet a certain diligence request from an investor, whether it's a bank or a private investor. For example, certain financial statements or a material agreement or some license, and then it's really the company that's causing the delay. So I think this is kind of comes back to doing basic homework, being prepared, getting your house in order. And for the most part, if those 3 boxes can be checked, I think a company is in a reasonable position to raise capital.
Okay, and what is the state of the IPO market? I know there have been some cancellations this year because of the volatility. How do you see things right now?
Yeah, I mean, I think it's a super interesting time. To your point, we haven't had any IPOs this year yet that I'm aware of. And this is the driest period I think we've had since roughly 2011, right around the time of the Eurozone crisis, where we had a month-long drought. So obviously not a strong reaction from the markets. That's on the one hand. I guess on the other hand, you have venture-backed companies that are investing more money into startups than I think since 2000, the height of the dot-com boom. So company-backed VCs are performing incredibly strong. Lend into this mix the fact that M&A deal value is probably at its all-time highest. I think we had actually in excess of about $5 trillion last year. And these are kind of mega deals where you basically have a lot of capital or securities consideration during the deals, and these are mainly healthcare and tech deals. So you kind of have this 3-prong contradiction going on. Look, the markets are certainly dry right now, but I don't think it's a matter of if they open, it's a matter of when they'll reopen. And I think that when they do reopen, you're going to have basically the strongest companies, the lowest hanging fruit that are ready to get picked. So I think once they come off the sidelines, investors will be looking at these quality companies, and these will be strong management teams. These will be great business plans. These will be, products or services that are not of the here today, gone tomorrow type. I think it'll be interesting. I mean, I think as we talked about before, we have a couple of biotech deals that I think are pricing this week. So I think we'll have a pretty good indication kind of in the next couple of weeks how the market reacts to that. And all in all, I think the first quarter will be pretty fascinating to see.
Now, interesting that you say there's still private equity money out there, a lot of it, in making investments. So is there something with the IPO process, maybe regulations or something like that, that's keeping people away from that at the moment?
I don't think it's regulations. It's a tumultuous time. We have very strong geopolitical events going on internationally, obviously political situations nationally that some folks are probably confused about. So I think it's just a matter of everybody calming down and seeing kind of what lays by how the dust settles, and then the market will then I think pick back up again.
Okay, and of course that brings up the Securities and Exchange Commission
Sure.
and their role in all this. How do you see that at the moment?
Well, I don't think the Securities and Exchange Commission has any role just with respect to the recent drought. The SEC had some events going on last year with crowdfunding regulations that have obviously changed, and I think recently, actually, from our perspective, the SEC has been doing a great job working with issuers. One interesting recent trend that we have seen is that the SEC seems to be issuing less comments on initial registration statements than they had historically. So basically, a company will file for an IPO or registration statement, and the SEC has 30 days to respond with comments and questions. And what we've seen at FS is there seem to be some less comments being issued by the SEC. And I don't think this has anything to do with leniency on the part of the SEC. I think it's the fact that issuers are doing a better job filing registration statements, and that may have something to do with transparency in the marketplace and learning from previous issuers, both good and bad, how to file a right registration statement. So I think companies as a whole are doing a better job. It could be other factors. There could be less financial statement complexity being kind of intermixed into these registration statements. But for what it's worth, I don't think it's had a strong impact in terms of the time a registration statement becomes effective. So we're still seeing roughly 120, 150 days until a registration statement becomes effective. But putting that aside, I think it's a great sign from the SEC. I think it's a great compliment to issuers that everybody's doing a better job filing registration statements. So it's a positive step forward.
Okay, thank you very much, Jonathan, for joining us and explaining the trends in the IPO process.
Thank you very much for having me. It's been a pleasure.